All right, traders. So today we're going to be talking about what is happening to the Japanese yen, right? It's the middle of March as of right now, and we see that even up until Q2 2021, there's going to be a lot more sell side to come. Take a look real quick here at what we see going on with the Japanese yen. Right now I have up the Euro JPY, GBP, USD, Aussie, NZD, and the CAD JPY. And some of these are on weekly, some of these are on dailies. This is a weekly actually. What you guys can notice is, take a look. What do you guys see happening right now? The Japanese yen is selling off massively across every single currency pair. Okay, whether it's the CAD, whether it's the NZD, whether it's the Aussie, it doesn't matter. The Euro, the GBP. You guys can see that in 2021 and specifically around Q2, right around coronavirus of 2020, all right, we started to see the Japanese yen absolutely hemorrhage, massively run sell side. And not a lot of traders understand what's happening to the Japanese yen. And if you understood from a fundamental perspective what was going on, you would have been able to capitalize on this. And since you're watching this video now, you're going to be able to potentially start to get involved in some more Japanese yen sell side. Okay, so my name is Cleveland Bishop. I like to do fundamental analysis on currencies, on the equities, right? Because fundamentals give us value, while the technicals here give us prices. Fundamentals gives us value, and anytime you want to take a trade, it's because there is a differential between price and value. That's why fundamentals are so important. It's one of the key things missing in all retail traders tool set. So make sure you guys are subscribed so that way you can learn more about fundamentals, okay, and you can get up to date on what's happening in currencies every single week. All right, so a lot of people would say, well, what's the fundamental news announcement then, Cleveland, that's driving this Canadian dollar sell side? What fundamental news release or what fundamental economic indicator should I be looking out for? Well, I take a look here. So we like to use something called trading economics. Trading economics is just a really great resource to help you find all the details regarding any specific economy, or really almost anything here related to economics. And so I have pulled up all of the different all the most important Japanese economic indicators. So right here we got retail sales. All right, if I was to kind of compare and contrast any of these indicators with another neighboring economy, you would see that the results are quite the same. All right, so retail sales, let me pull out here to the 10-year. You guys can see right around COVID, you had a massive shot down on retail sales. Okay, and then you had a push to the upside. I'll go to the 5-year out so you can see a little bit better. You had a push to the upside where everyone saw that V-shaped recovery across the entire global economy. Pretty much every country came back from Corona very strong. And then of course you have some whipsawing. You get a spike here. Is all the data completely accurate? You know, who knows, maybe so, but we do know that a lot of these economies came back very strong. Okay, and now right now you see that retail sales has pretty much came back to normal. So let's take the Euro retail sales to see if there's any kind of big difference as to why the Japanese yen has been selling off so dramatically, because the Euro hasn't sold off in any capacity as much as the Japanese yen has, right? So we'll head over to the retail sales for Europe, and what you guys will notice is pretty much the same thing. A massive whipsaw sell side, a massive push to the upside, and then we're just meandering around the price action. And so what's the Euro looking like? We have a Euro index actually that shows us exactly what the Euro is doing relative to all the other currency pairs. And if you guys will notice here, we had a massive push to the upside during Corona, a pullback, and then pretty much again the Euro hasn't really been doing much. But if we look at our Japanese index, this is our Japanese yen relative to all the other currency pairs. You guys can see here the Japanese yen is just pushing massively sell side. So it's not retail sales that's making the Japanese yen run so dramatically sell side. Okay, so let's keep looking. Let's see what this could be. Okay, it has to be some type of economic indicator that's driving this sell side, right? Well, if we keep looking, again, guys, I promise you, we're actually not going to find it. Balance of trade, right? Balance of trade just deals with imports and exports in the economy. So if we pull back 5 years out, you guys will see balance of trade again took a hit, pushed back to the upside where there was a surplus, and right now it's just volatility. Okay, I promise you all the other ones look the same. Japanese inflation, same thing here. All right, if we pull out to the 5-year, you'll notice a massive shoot to the upside with the Japanese inflation. That's interesting. We'll talk about that in a second. But by and large, you're going to see pretty much around, again, the same thing. Let's pull back. Let's go to the inflation rate here for the U.S. Inflation rate is also called CPI, the Consumer Price Index. The Consumer Price Index basically helps you understand how much consumer prices are priced relative to maybe a month ago or 2 months ago, so on and so forth, right? And there's something called core CPI, and core CPI takes out energy, basically oil, and food prices, because those are oftentimes very, very, very volatile. When I say food, I mean stuff like wheat, corn, all these kinds of things, okay? Now let's pull out and let's take a look at the inflation rate for the US. Massive shot sell side during Corona, and then again pulled back up. So we see pretty much the same thing happening across all of the other currencies, just a tremendous amount of volatility as it relates to the economies, but yet the Japanese yen has taken the largest hit out of all of our economies. Okay, so what's going on there? Well, it's quite simple. So basically what's happening in Japan is Japan has a negative interest rate, right? I'll actually show you guys this right now. So if we pull over and I want to show you guys the Japanese interest rate. So there we are. Okay, so if we pull out, I want to go to the 10 years out here. Okay, so 10 years out, you guys can see all the way back to 2011. What do you guys notice here? So the Japanese interest rate at one point was at 0. You weren't getting any interest on your money in any capacity over in Japan. And then in 2016, they lower interest rates to negative interest rate territory. Now, Japan isn't alone here. You had the UK also at one point in negative interest rates. But what's interesting about what's happening in Japan is when the Japan Central Bank created a negative interest rate environment, that really took a lot of the capital, a lot of the Japanese yen, Japanese investors, that took them to basically exchange their Japanese yen for a different currency. So anytime they would facilitate any buying in global markets or any stocks, basically what was happening was anytime you have any money sitting cash, you're actually getting penalized in a sense. So what the Japanese central bank wants, they actually want you to convert their currency into a different currency, start making money overseas, start making money in other stock markets. China and Japan are some of the biggest investors in US stocks, okay, and then repatriate that capital back into the Japanese economy. They're looking for monetary velocity. Monetary velocity is basically when you see cash flow and capital flow inside an economy, okay? And if there is no monetary velocity in Japan, then basically what's happening is the Japan interest rate and the overall Japan inflation is just getting lower and lower and lower, and that's not what they want. We have low inflation that usually leads to lower retail sales, lower purchasing power for that specific economy. There's a lot of negative things that comes with low inflation. But nevertheless, what's happening is there is a repatriation right now of capital out of the Japanese yen. Okay, so if we pull back, I want to show you guys something here. One thing we didn't talk about is the massive increase in value the Japanese yen experienced right around Corona. So you guys can see all this sell side momentum across pretty much almost all of our currencies. Notice this, okay? You see right around March, right around Corona, Japanese yen increases in value. Japanese yen increases in value relative to the euro. Japanese yen increases in value relative to the pound. US dollar somewhat, it didn't do it so much, and we can talk about that in a second because the dollar also pretty much reacted pretty much the same as the Japanese yen during these times. But what happened was, again, there was a repatriation of capital back into the Japanese economy because the people, the citizens in Japan that were once avoiding that negative interest rate, they said, you know what, since markets are so crazy and since risks are so high, we'll take that 0.1% cut on our money and we'll repatriate that capital back into our banks, back into our savings accounts, back into our funds, and we'll wait out the overall pandemic and the overall market volatility. All right. And so that is what originally happened right around March. All the Japanese investors took their capital from overseas and put it back into the Japanese yen. That's why you see the Japanese yen increase pretty much across every single currency pair. But now, since risks are basically increasing and market participants are saying, hey, look, you know, risk aversion isn't so sexy anymore. There's a lot of things exploding in value. There were a lot of cheap assets that were very, very much sexy looking to a lot of investors across the world. These Japan investors are taking that capital and putting it back out into the global economy. And that's why you see the Japanese yen declining in value. So as we continue to see the overall global economy continue to perform better and better and better, you will continue to see the Japanese yen decrease in value. And I don't see a lot of these other channels talking about this. And that's why I think it's so important for you guys to understand this, because the second you can conceptualize what's happening on these currencies behind the scenes, okay, this isn't something that's on an economic calendar. This is overall sentiment. Okay, sentiment is real. When they say there's three types of analysis, technical, fundamental, and then sentiment analysis, this this is that sentiment analysis, okay? You don't get this on a fundamental calendar. So it's going to be really important for you to understand this moving forward, because now, guess what? If you start to see that maybe the global economy isn't shaking up so well, maybe there's something else that comes out that could be very, very negative for the global economy, what's going to happen to the Japanese yen? It's going to start to increase in value again. So as it stands right now, as global markets start to cool off and more people are putting risk back out into the economies, then guys, this Japanese yen is going to continue to go sell side. You're going to continue to see breakouts of the highs across all of the Japanese pairs. You'll see breakouts across every single currency pair that has the Japanese yen component. And if you're on the right side of that, on the sell side of that for the Japanese yen, then you're going to benefit massively. Okay, so you guys got to pay attention to the risk aversion that's happening across global markets right now. So again, this is not on a fundamental calendar. This is sentiment, right? Everyone talks about, oh, sentiment, fundamental and technical analysis. This is a prime example of sentiment analysis playing out because market participants are taking their capital out of the Japanese yen economy and putting that, well, Japanese yen banks, and putting that out into different economies, US dollar, GBP, euro, emerging markets, so on and so forth. And if you guys are excited to learn more about fundamental analysis to improve your trading performance, then guys, check out the link in the bio. We have a 2-week boot camp that teaches you each catalyst that drives each currency specifically, okay? So there's 15 different trading catalysts in Forex that drive 95% of all of the volatility you see across all your currency pairs. We go over that in 2 weeks. Within that 2-week span of time, you guys are gonna learn so much about how to trade fundamentals and how to apply that to your trading to, again, improve your trading performance. The link to the 2-week bootcamp is in the bio. So we're gonna be back later on this week. Make sure you guys like and subscribe to the video, okay? That's gonna help the channel grow. That's gonna help people learn more about how to trade the right way. I'll see you guys later on this week. Peace out.